And what rhythm means is like, you have your setup and it's occurring frequently, and every time it's occurring, I'm managing the risk well, I'm taking profits, I'm letting the winners run. And when you get into that groove, you start to build some confidence where your account starts to grow and you start to think about compounding that account.
I'm joined today by Mike Huddie Hudson, who is a successful trader in his own right. Starting with just $20, he managed to increase his profits to well over $1 million. He's also a member of Clover Trading, who just held their in-person boot camp in Boston. So Mike, Huddie, Hudson, what do you prefer? How did you get the name Huddie?
It's actually a great story. So yeah, I'm known in the trading community as Huddie. My real name is Michael Hudson, and I go by Mike Huddie, and that's how people can find me. And it's actually a funny story. We all have our screen names. Traders often get nicknames. And so when I first joined my first couple of chat rooms, I went by Hudson Trades because my name is Michael Hudson. And after talking to people and building up some kind of repertoire, I started to talk to Mark Crook a lot. And Mark Crook's actually the first person who started to shorten Hudson Trades to Huddie. And so I started to go by Huddie in the chat rooms, and I changed from Hudson Trades to Huddie, and more people started to call me Huddie. And you have to understand, when I'm back home, I'm Michael, I'm Mike, or I'm Hudson. A lot of Michaels get called by their last names. And so the trading community started calling me Huddie. Eventually I moved to Scottsdale and I started trading with Roland Wolf for about 2 years. And to my surprise, when I got there, he started calling me Huddie. And his wife was calling me Huddie, and his kids were calling me Huddie. And then everyone I met in Scottsdale was calling me Huddie. And then I'd go to the conferences and they'd call me Huddie. And it wasn't a name I chose, but it started to stick. And I changed my socials to Mike Huddie. And I got back to LA and people started to call me Huddie. So it was actually this name that Mark Crook, who's also an amazing trader, gave to me at a very early on part of my career. And now the biggest problem is he Michael, is he Mike, is he Huddie, is he Hudson? So as far as traders go, I'm Mike Huddie, and friends and family call me Michael Hudson.
Awesome. Well, thank you for clearing that up, because I've wondered this for months and months now, so yeah. Thanks. So for the audience who might not know much about you, I'd love to just start by asking a little bit about what got you interested in trading, and what was that process like to learn how to trade for you?
Sure. I remember it just like it was yesterday. It was 2015. I was in college, I was a sophomore in college, and my friend had invited me to a no-commission trading app, you might have heard of it, called Robinhood. Mm-hmm. Back then it was a beta, so you needed like an invite code to even be in. Mm-hmm. So I downloaded Robinhood, I put $20 into that Robinhood because that's what I had free cash at the time. Mm-hmm. And I started to invest it. I was in class one day and I started to think, okay, if I have 20 bucks, like let's just throw it around because there's no commissions and let's just see what happens. And that's truly how I just got involved. I really was just curious about what was out there. I diversified the $20 amongst 5 or 6 or 7 different stocks, and you can imagine what kind of stocks I was picking. In order to diversify $20, you need to have penny stocks. Mm-hmm. So I diversified it, and at the end of the day, I had made like 4 cents. And I just wanted that immediate gratification, and I said, well, man, that's not enough. I mean, what can I expect to make if I, pick the best? And I looked at the Warren Buffetts and all the other billionaires, and I said, what is the average return that these guys are doing? The number was 30%. And I said, wow, 30% on $20 is $6 after a year. That's not enough. So then I started tracking stocks. I started to make a list of, I don't know, I remember the Excel was like maybe 150 stocks long. Just went on Google, penny stocks, and I just started writing them down and tracking their open, low, high, close, just really basic data. I started to notice that some stocks moved 300-400% in a day. And then I asked myself, well, if I could capture a piece of that move, I could probably pay for my rent. And that's where I started to just dive into penny stocks, because I noticed that there was volatility. Whereas the bigger companies, even if I chose correct, it was never going to move my account in the right direction in the speed that I wanted it to. So that's how I found it. It was just research.
And how did you learn about penny stocks? How did you learn about the mechanics of the market, how to buy, how to sell? What was that like at the very beginning for you? And how did you learn and grow? What resources did you use?
So it was all very user-friendly. I mean, the buy and the sell button, I kind of grew up in the generation of computers. So when I was introduced to platforms, they were user-friendly for me. So buying and selling was just like intuitive. But the first person that I found when I was Googling was Tim Sykes. When I was Googling penny stocks, his name came up everywhere. And I really actually vibed with his messaging, which was, you can make a lot of money, you can travel the world, you can be free. And that's always something that I was trying to work towards at a very young age. I never really wanted to be someone that had a 9 to 5 or a barista. I did, right out of high school, I did door-to-door sales, did it for 2 or 3 years, decided to get my college education, and I've always was trying to get away from that and be more of an entrepreneur. And so I really liked Tim Sykes' message. I got into his program, and then through his program, I found Tim Grittani. And that was the turning point for me, where I started to understand what trading really was, the dynamics of it, market dynamics, what to expect, how to have systems, patterns, etc. And then it got in depth, and that's where we really started taking off.
Okay, and what were some of the first stocks or patterns that really made sense to you, where you realized, hey, I could probably do this as a career?
So in the beginning, I tried everything, and I experienced very all over results. I mean, random results. And so eventually there was a turning point where I started to track my trades. And this was really important because I needed data on myself. I wasn't the biggest guy that was tracking patterns necessarily. I was tracking, the patterns that were already invented. The wheel's already been invented. I wasn't trying to recreate the wheel, but I needed to know what my performance was when involved in these patterns. And so I started tracking my own performance, and that's what led me to find the OTC market. I started to find that when I would short sell extended OTC stocks, I had an amazing win rate, amazing risk reward properties, and I started to find focus. Whereas before I was trying to trade everything there was, if it was a multi-day breakout, a panic dip buy, the list goes on what you can trade. There's so many patterns and niches and systems that you can learn from. So it was really about finding the one that was making me win the most and lose the least. And I immediately found that OTCs, when they would go on hot runs, I'd have amazing success. So that was the first thing that I found. I found through short selling OTCs where I started to find success. And it all happened kind of at once. I've been trading for 2.5 years. It took me 2.5 years to find consistency, which was 2.5 years of making a grand one day and losing a grand at half the next. It was 1 step forward, 1.5 step back. And it was, not gonna lie, it was very, very tough. In the moment, you think about quitting, you have to overcome, have very positive beliefs about yourself and self-confidence, etc. And then eventually into the 2.5 year mark, I was graduating college. I had about 6 months left of my college career, and it was either make it or break it at this moment. So that's when I said, okay, this is no longer a hobby. I got to treat this like a professional. I got to understand everything about my statistics and my performance. And I really got to stick to what's working. And I got to avoid what has not been working. And without knowing where you're losing and where you're winning, you can never avoid the losses. So I very quickly realized I wasn't a long bias trader. I had a lot of losses there that I couldn't control. For whatever reason, if I'm in a long position and it goes against me and it breaks my support, I'll cut it, and then it'll break it by a couple pennies and come right back into the structure, and I'll buy it again and take the same loss in 5 minutes. And with the short selling, I never had that tendency. It was, I had a high win rate, and when I was wrong, I would cut it and I would walk away. I'd say that was weird, that's not what was supposed to happen, and I didn't fight them. And for whatever reasons, I would fight my longs. So it was through this process of understanding who I was as a trader that led me to have immense amount of focus in a very specific part of penny stocks. And I wasn't just short selling everything, I had a very specific pattern that I was short selling, and I would only look for that. A lot of days I wouldn't be trading, I would be studying in school, I'd be playing a sport, and then when that pattern was there, I knew to be there. And that pattern got really hot in the last 6 months of my college career. I was able to make 6 figures in 6 months, and the account grew exponentially. And then in that moment, I said, okay, I could do this full time. I proved profit. And it was really this moment where I'd been doing this for so long, lacklusterly, like kind of leisurely, that a fire got lit underneath me when closing bells started to come, and I'm meaning in my college career. Because again, my worst fear was graduating and having to go get a 9 to 5. And at this point it would have been investment banking or something in finance, portfolio management, which is not really what I wanted to do. It's just where my education had been at this point. So that's how I realized that I could do this for an income. It was in that last 6 months.
It has to be pretty exciting for someone who's about to graduate college to sort of have this entrepreneurial sort of breakthrough and understand that there's a very good possibility that you might be able to become your own boss. So I think that's pretty inspiring for those out there. But it's also important, I think, to remember that, as you said, like, you were working really hard to years of trying to figure out what your style is going to be, tracking your trades and your style. I'm assuming taking some losses and paying your market tuition. So on that topic of tracking your trades and tracking your progress, what type of data were you tracking in these like Excel spreadsheets for those who might want to do something similar?
That's very basic information. I didn't want to overcomplicate it. I didn't want to have analysis by paralysis or anything that could mess with my psychology. So I was basically tracking what was my profit and loss at the end of the day, what setups did I take, were they long or short, and what was the pattern. And all three of those things were always identified in my stat sheets. And then as it progressed, I would find exactly which pattern I was successful at, what kind of profits, what kind of losses came from those patterns. And I would start to weed out the ones that were causing me harm or pain in my account, and I started to focus on the ones that were proving good results. So it's basic.
And so in terms of like risk management, what would you say is most important for people to be able to make their profits and their winning trades significantly greater than their losing trades, so that you're on this sort of trajectory into the right side of like the equity curve?
The thing that helped me really go exponential was keeping my risk consistent and being able to identify A+ opportunities within the market. And what I mean by consistent is if I had a setup that I would have risk tolerances per setup, and I would make sure that I was sizing in the same dollar risk when I was wrong. So let's just give an example. Every time that I was in, an OTC short setup, I would make sure that I'd want to lose $1,000. If I'm losing, it better be $1,000, right? Because anything underneath would be inconsistent with my stats, and that was really important to me. I needed consistency across the board. And I just found through trading that there are moments where you have exceptional risk reward, where that same $1,000 could be a 10% risk, or that same $1,000 could be a 3% risk. So the amount of equity I had in the stock in that time would vary, but the risk would always remain the same. So at times I was just in very advantageous risk reward moments where I'm making 1 to 20, 1 to 30, 1 to 40 based off that 1K of risk. And that's how I really grew, because I was always focused on risk first and amplifying the risk reward equation.
And when you started to see success, were you ever tempted to just trade and overtrade just to see how fast you can grow your account? Because you went from $20 to, 100, 1,000, 10,000. How were you able to stay consistent and not get ahead of yourself in such a way that you would, come and crash your equity curve?
And I think there were moments that I definitely took a couple risks where I was young, and I did some stupid things that I think paid off. Where once I started to find rhythm, and what rhythm means is like you have your setup and it's occurring frequently, and every time it's occurring, I'm managing the risk well, I'm taking profits, I'm letting the winners run. And when you get into that groove, you start to build some confidence where your account starts to grow, and you start to think about compounding that account, where it's like, maybe I've made, what exactly happened was I made that 6 figures at the end of the 6 months. And then, a really A+ setup came around in this OTC marijuana run that we were having. And in my mind, I said, okay, I want to throw all of my profits in on this position. And my risk is going to be not $1,000, but I could lose $10,000. But it was all my profits. So I had built up this rhythm, this cushion, and I was in sync with the market. And I finally had the audacity to go bigger. And there have always been moments in my career, 2020, 2021, another moment where I've had the audacity to push size, to push risk tolerances once I find my rhythm. Did that answer that question?
Absolutely.
Okay.
And that confidence that you had, I think it's important to note that that came from you being profitable, right? It wasn't you just sort of on a whim thinking, okay, maybe I'm on a losing streak or my equity curve's going the wrong way, and so you got to make it all back.
And that's the worst time to do it. It's you want to put good money after good money, not good math after bad money. So if the opposite was happening, I'd usually pull back, or I'd stay as consistent as I could be. I was never risking too much of my account at one point where any loss could have been a blow up. I was never putting myself in extremely dangerous situations. I mean, of course, anything could happen, but I was always very respectful of the market as well.
And I know you had mentioned the marijuana stocks. Would you say those are probably the most important trades, when you think about what really allowed you to jump up and level up? Was it those those types of stocks, or is there one particular ticker or theme that you think really was the one that highlights, your trading career?
It's a market environment. It's not a specific stock. I always tell people, like, my goal most days is capital preservation for an easier market environment. And I've realized throughout my career that there are slow markets and there are hot markets. There are hot sectors, there are hot themes. And I find that when you have hot themes, hot sectors, you have liquidity, you have multi-day runs, you have percent gain, you have all the emotional components of trading reflected in the price action, fear, greed, etc. And when retail is overhyped on something and things stop trading off their fundamental value and start trading off of perceived value, that's where you have some of the craziest moves. Mm-hmm. And so the marijuana sector that came around was off the backbone of just a very intense market. The marijuana OTCs were running, but this was also the time that Bitcoin was spiking to 20K from its original run in 2017. And there were a lot of Bitcoin stocks in the market that were also spiking with it and also providing opportunity in the OTC market. So what it was I finally saw a hot run where it was like 3 to 6 months straight. I had opportunity every week, and it was the opportunity I was looking for. It wasn't like I had to go find something that wasn't what I normally do. Mm-hmm. And being able to experience a high frequency of trades within my pattern allowed the account to grow, allowed me to have patience and understand where I perform and where I don't perform. Mm-hmm. And that's what it was. So I'm thankful that, I think the OTC marijuana stocks were running because Canada was legalizing it nationwide. So it was causing a chain reaction across the whole sector. And I was able to identify that and push because, again, there was a frequency of, every 4 or 5 days my pattern would be there. And then again, we saw that in 2020 and 2021, and I've seen it in a number of different scenarios where you can see, obviously we had the COVID and the vaccine stocks, mm-hmm. but we've seen it with the shipper stocks. We saw it with oil and gas stocks when, Russia and Ukraine started the war. So there's just these moments where there's extreme volatility based off of macro influences, mm-hmm. and it allows for a high frequency of trading.
Mm-hmm. Yeah, so increased volatility, more volume and liquidity coming into the market. Those are all things, correct me if I'm wrong, but those are the types of setups and stocks that you're looking for, something that brings people to the trading market.
Yeah, and I was able to see that firsthand. Mm-hmm. Before 2017, it was always just folklore, but the marijuana stocks ran in 2013 when California and Washington had legalized. Mm-hmm. And I had studied those charts in the past. I saw the moves. They were 1,000, 2,000% in like 3 or 4 days. It was absolutely mm-hmm. incredible. And I never saw that until 2017, and I realized, whoa, there are easier times and there are hard times. And being able to see the easy time was kind of the aha moment that I said, okay, there are better environments, mm-hmm. and I just need to position myself in the right spot at the right time.
Mm-hmm. Great. And speaking of hard times, trading isn't always really easy. It's not always profits every day. So could you talk a little bit about some of the losing trades and how you recovered from those? Because I think it's important to understand that everybody's going to have these streaks or a big loss. How do you get yourself out of that and get back into the rhythm of booking profits and getting back on track?
So for me, it's always been about going back to the bread and butter pattern. What is my most consistent, where I lose the least and I win the most? And for me, it's always been this, first red day stuff, this extended stuff that's having a first red day and I'm short for that day. And I find that is the most important. You need to stick to somewhere where you are very familiar and very comfortable, where it's business as usual. Whereas, if I'm ever off kilter and I'm over trading or I'm trading a bunch of different setups and I'm experiencing loss after loss after loss, the thing that always brings me back to center is going back to the thing that maybe doesn't occur as frequently, but I know I'm very comfortable trading it. And I know I can keep the losses toned down and I know how to size into them mm-hmm. better than other setups. So it's always about having a home base to come back to. And if you don't have a home base to come back to, that's where danger lies. And I'm always thinking like you're only as good as your next trade, right? So everything that happened in the past is a singular event because the next trade could either make you rich or blow you up, really could. You could make $1 million, you could lose $1 million, right? Mm-hmm. Especially as a short seller. Mm-hmm. So you're only as good as your next trade. And I always, again, respected that kind of terminology and have always been in the boat of build, grind, and then if there's a good market, push size. Mm-hmm. Because if I lose money in a good market, I can expect my pattern to be there soon after. Or if I lose big money in a slow market, that's where it opens the door to disaster because my pattern might not be there. I might get bored. I might have to sit on hands for a while. I'm down a lot, and bad things can happen. So a lot of it is just the right perspective, being positive, having belief, and really having a core strategy that has a high win rate for whoever the trader is, and the losses are kept under control when you are in that setup. Right? I'm not the kind of guy that kind of shorts parabolics or buys panics, because I think those setups, although can be profitable, do inherently have a ton of risk when you're shorting a stock that's just going parabolic. So if I take a big loss in that scenario, say there was a parabolic that I wanted to go after and I ended up losing, 10, 20, 30K, whatever it was, I would be able to say, okay, what was the reason that this happened? What was my psychology? And I would come back to my home base and build it back through that manner and kind of stay away from the stuff that injured me.
Great. So would that be your advice to traders who are either dealing with a big loss or a losing streak? Basically, slow down, return to your home base. If you don't have a home base, figure that out.
Yeah, I think it's the most important as a trader to have a home base, a bread and butter pattern that you can always rely on, that occurs frequently, and that you are familiar and comfortable within, and you can trade it well. Because if you don't have that, then I think it's very hard to recover or even stay mentally strong.
And do you have sort of a routine that you think about in terms of like a home base, in terms of your mornings when you wake up? Do you have a sort of routine that you go through, or even after hours, do you have sort of a routine that you go through to assess your day, find stocks that you might be interested in trading for the next session, and what does that all look like for you?
Yeah, I mean, it's not as structured as a routine as you would think. I have a lot of structure in my routine as I go throughout my day-to-day. Usually into close, I like to short sell in the morning, and I like to buy stocks into close, and I keep them kind of separate that way. I am much more short biased than I am long biased, so I'm generally looking for more short patterns than long biased patterns. And so into the afternoon, what I'm generally doing is not really trading. I'm seeing how stocks are closing. I'm gathering information. I'm seeing why stocks are running, what are the PRs, what are the volumes, what's the theme of the day. So I'm taking in information into the afternoon without the intention of trading. I'm running scans in that moment. I'm doing research on the filings, the press releases, as I already said, and I'm collecting data so that at night when I'm making my watch list, I know why things ran, how many days are they up, what's the reasons, and then I plan for the short sale trade if it is coming in the next day, 2 or 3 days. And that's generally what my process looks like. I'm taking action in the morning, taking a part of that volatility in the morning, usually done within the first 2 hours. And then the rest of the day is about understanding what else is moving and why it's moving. And then at night, I'm building the watch list to add on to the data.
Okay, that's great. And I've gathered that you like to travel and see the world and live. And so you might be in a different country or something like that. And so wherever you are, is this sort of the type of information you're collecting on the day and what your routine looks like? And can you talk a little bit about what it's like to be somewhere outside of home base and still be doing your routine?
So I travel and trade a lot, and it's a lot more difficult than I think people initially think it is. There's tons of personal obstacles you're going to go through when you are trying to have a vacation, but then all of a sudden the trade catches your eye and you're stuck and glued to your computer. But it always does come back to, again, my bread and butter, right? When I am traveling and trading, I'm still looking for the pattern that I can identify the easiest, I can trade with the most ease, I can control the losses, so that if it does arise, as I'm traveling, I'm kind of more active on Twitter. I'm allowing the people that I follow that I can trust as resources to tell me what's running, why is it running, and if I see something I really like, I start to plan for it. Most of the time I'm not trading. Most of the time I try to enjoy myself. What's the common line? Trade to live, don't live to trade.
Yeah, absolutely.
And I firmly believe in that, but I also believe that if there is an opportunity that's so great, I'm going to go ascertain that opportunity, because sometimes you have opportunity costs. But it's still very important to know how to identify that opportunity, because it's very easy to get stuck while traveling and trading to get glued to your computer. And that's where a lot of mistakes can happen, because you are on vacation and you are trying to enjoy yourself, but then all of a sudden you're caught in a weird situation where you're either watching a stock in you're all day and you don't want to be doing that, or whatever it is. So it's being able to identify opportunities. It's really important.
Mm-hmm. And I wanted to ask specifically about some of the challenges that you've faced trading from afar, when you're maybe on vacation. Or is there anything that comes to mind in terms of what you've had to deal with in the middle of trading?
Well, sometimes you have no Wi-Fi, and that can make things really sketchy. Not impossible, but it ascertains a lot of risk, and the market, you have to respect it, and things can go wrong, and things will go wrong. So Wi-Fi can be a big problem at times. You can kind of come to the market if you're gonna, again, like I try not to religiously watch the market when I'm on vacation. I allow kind of the people I follow on Twitter to tell me the market environment through their posts. If I'm sitting there all day scanning and watching stocks, I might get involved in something that's not ideal and kind of ruin the vacation because I'm just glued to the computer for 6 hours. So having to disconnect from that tendency and knowing how to just briefly watch the market but not engulf yourself into the market. And I also think like taking big losses while on vacation can cause a person to want to come back every single day and make that money back, and then all of a sudden the wives, the kids, the girlfriends, whatever it is, the friends are saying, hey Huddie, come out and play with us, and sorry, I can't, I'm in the middle of a trade. And it might not be a trade I wanted to be in the first place, but now here we are. So the biggest issue I think with traveling and trading is doing exactly that and disconnecting. And I think the art is knowing when to come back for an opportunity that is within your time frame, that you understand like the back of your hand, and you can execute on specifically within your time frame, and it doesn't become this wild, outlandish idea.
Okay, that's great, and I think that's important to keep in mind. There's things that are going to go wrong. You can't control necessarily all of the variables that you encounter, and so you're going to have to just deal with them. And one of the things you mentioned was having, kind of like a network, people that you follow on Twitter to, sort of give you information about what they're seeing in the market, and you can decide whether you're going to get into a trade that way. And so I wanted to touch on the topic of like a network, a pod, if you will, and Clover Trading, because it sounds like, you're doing something incredible by joining some of your, friends and great traders all on their own. So can you talk a little bit about Clover Trading, how that came to be, and what exactly you're doing, what your goal is with Clover Trading?
Sure. So yeah, I mean, as far as networking, I think trading is a very lonely profession, and especially when I got started in 2015, I mean, it's grown vastly. It's become incredibly innovative. The amount of people that know about trading has increased. I mean, you have to think before the 2000s, I mean, in order to execute a trade, you had to be on the phone, you had to find the chart on newspaper, and so this is kind of a new industry. And there's more and more people finding out about it every day. It's very tough. There's a high turnover, etc. So it's really hard to find a network that can go through the trials and tribulations of trading. The awesome thing is that very early on, I did my best to put myself out there. I went to the conferences, kind of like the boot camp we just put on in Boston. The whole idea was we want to create an environment that was once created for us. And it was at these conferences and in-person meetups, and I went to as many as I could because I wanted to engulf myself into the craft. And I wanted to talk to the people about it and share ideas and learn, right? And be a part of a community. And that is, at these events, is where I met Tim Grattani, Jack Kellogg, Don Master-Mateo, Kyle Williams, Roland Wolf. I mean, a ton of really good traders that I've been growing with for the past 3, 4, 5 years. And they become my best friends, really. And it's surreal to understand that like this whole idea started with this $20 outlandish idea that everyone in my life called me crazy for. And it's grown the way it has, and the friendships and connections have blossomed into lifelong friends. And that's beautiful. Specifically the Clovers, we were all the same age group. We all got started roughly in between 2015, 2016, same time. And we all traded the same markets and had a really similar understanding of the niche of small cap. And we all kind of trade differently, but we trade the same stuff. And we understand the same dynamics and psychology that are attributed to the stuff that we trade. So it was a really nice cohesion right off the bat. Us four, we've been in a group chat together on Discord. We've just been in chats together since 2017. Always using each other as a pod to branch ideas off of each other, check in, check out. Here's my watch list. What's yours look like? Here are the levels that I like. What do you think about your levels? And that always helped us progress and grow. And we also motivated. Jack Kellogg's a great example of this, where he just started pushing size in 2020 and 2021, and none of us wanted to get left in the dust. So he motivated us to also, in our own way, push size if we were comfortable. And having that competitive nature with each other is a lot of what helped us, A, become great friends, and B, progress so much in the market. The whole idea behind Clover Trading was, A, we wanted to create that same community, and we're at the point where we wanted to be the leaders of that community, right? I remember starting off, it was very hard for me to get all of my questions answered. I mean, you can ask them in a chat room, but only so many are going to be answered. A lot of the questions get ignored. And I told myself way in the beginning, if I ever made it in this career, I would answer people's questions, because I remember how frustrating it would be for me to let my questions go unanswered. So that was kind of the start of me wanting to be in this leadership role. And way in the beginning of my trading too, I mean, as I started to find consistency, so maybe about 2.5 years in, 3 years, I started to create video lessons. I would recap the trades, at the end of the week or at the end of the day. If I, traded a nice sequence of a volatile stock, I started to make video lessons, breaking down the daily chart, breaking down the intraday action, the volume, etc. And I would post these videos. And the initial goal of these videos was not for the public. It was for me. It was game footage so that I could go back and review how I felt, exactly my thoughts, what are the parts about this trade I liked, and again, so I could have a home base. If I ever got off kilter, if I took a big loss, I'd go back and watch the video and say, okay, Huddy, you are a good trader. This is what you have to do. You got to focus on the facts. But the result of me posting these videos were overwhelming feedback. I mean, people really liked the way that I broke down charts, my analysis. They said it was comprehensible, and the videos were getting a lot of views, tons of comments, and I was a nobody. I had made maybe 100K at the time. Mm-hmm. And that gave me the premonition that I might be good in this leadership role of creating these videos for, forever how long. And here we are 5, 6, 8 years later, where I feel like I've had enough success, a pedigree, to start doing this in Clover Trading, and I have, a rock solid team. People that I can trust, people that I know are amazing traders, people that I know bring their own attributes to the table as well. And that is the genesis of Clover Trading.
Awesome.
Yeah.
It's a really incredible group of traders. You're all extremely successful and inspiring in your own right. And you guys just came together, and you're there for the community, putting out great content, very helpful for everybody to watch. So it's incredible. Keep it up. And so for those who are interested, how can they follow you and learn more about Clover Trading?
So to follow me is @MikeHuddy on pretty much Twitter and Instagram. For Clover Trading, we're clovertrading.io. You can also find us on YouTube, where we produce videos every week on YouTube. We do Wine Wednesdays on YouTube as well, where we all sit down and drink a glass of wine and talk about the week. That's kind of a really fun one, because when you're trading, it's very hard to talk to non-traders about trading, which is again why it's so important to have your pod. And so me and these guys, we've always been kind of discussing our weeks, the losses we've had, the gains we've had, talking to significant others or best friends about losses and wins sometimes is kind of an awkward situation. But talking to people that understand the rhythms or the motions that you're going through in terms of highs and lows is like therapy, right? It's very therapeutic to be able to talk to someone about this stuff. And that's what we kind of do for Wine Wednesday. We just kind of talk through our emotions. And so, yeah, we're on YouTube. You can find us on our website, clovertrading.io, and on all the socials as well.
Awesome. Well, Mike, Huddy, thank you so much for taking the time to chat with me today. It's been awesome, man.
Appreciate it, Anthony.
Yeah.
Thank you.
And everybody, go check out Mike Huddy and Clover Trading online. Highly recommended. We hope you enjoyed this interview on the Investors Underground podcast. We have more great interviews that we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming releases the moment they become available. Thanks for watching.